Hello investors and traders. Today I'll speak about 3 dividend stock to buy right now, and let's start with the first one. It's WBA. It's one of the largest retail pharmacy operations in the world. WBA is undergoing a massive turnaround. Its actions are already lowering costs, increasing digital sales, and maybe most importantly adding full service healthcare clinics in hundreds of its retail locations. Becoming a more integrated healthcare company, it's helping to make this profitable company even more profitable. And let's check out its chart. It's a monthly chart. We can see that last 10 years WBA is traded in a range, and if we'll check the Elliott wave, in my mind it was the first wave, second, third, fifth, the first and the fifth. So most probably there is a probability we can get even lower, but here it's some kind of support level. So to buy WBA at levels of 35, 30, I think it's very nice. And also don't forget that you can get a nice dividend yield more than 5%. Also the RSI, the momentum indicator, telling us that it's maybe time to buy the stock, because now we in the lower border, and 34 it's telling us that now currently this stock is oversold. Let's check out its fundamental parameters. We can see that the financial stability, debt to EBITDA ratio is about 4, but interest coverage is very strong, is more than 7. So any problem with debt at this company, the gross margin is very high, it's more than 20, and also net margin only 4. So it's not, of course it's not Google, it's not Apple, but it's telling us it's now still it's a profitable company. The value of WBA for now is really very cheap. We can see that PE ratio is less than 6 and PS ratio, check this out, only 1.2, so less than 1. And I think it's very hard to find companies in the whole S&P 500 index less than 1, but PS ratio is very nice and very attractive. And let's check the dividend yield. We can see that the current dividend yield is 5.4 and the payout ratio is less than 1. Of course, WBA can even increase its dividend payout, so it's very attractive, and the dividend growth rate for the last 3 years is about 5%. Also, we can see that the company is currently buying back its shares from the market. So for me, WBA very nice stock, very cheap. Also, from technical standpoint of view, its performance for this year is down more than 30% year to date. So WBA is one of the stocks that I'm personally hold in my portfolio. The second stock for today is Johnson & Johnson. It owns a portfolio of excellent brands that make a product people need, and specifically healthcare items. The diversity across consumer health brands, pharmaceuticals and medical services in unmatched, and has proven to be a massive profit engine. However, management thinks this conglomerate structure has limited the company's ability to focus its resources, and announce plans in the late 2021 to split the consumer products business into a separate company. The split is expected to happen next year, with existing shareholders receiving shares of both companies. And let's look at the chart. In my mind, here we are increasing channel, so now we are at the lower border of this channel. Also, the momentum indicator is a weekly chart telling that maybe it's now time to buy the stock. And also let's have a look on its net profit margin. It's above 20, so very nice, very strong. We can see that even the last quarters, the last years, it was 10, 20. So for me, it's very stable company, and also very nice dividend we can get. Let's go through its fundamental. We can see the total score is 91, very high score. Any problems in that? We can see that cash ratio is 1. So in my mind, this company have any problems with that. The ultimate score is heavily more than 3, so the possibility of bankruptcy future year is very low. The gross margin, yeah, very impressive, 66, and the net is about 20, so the ROE, the ROA very high, so very profitable company. The valuation P 23, but the forward 15, so it's expected that the company will increase its profit future years. The price per share, we can see 4 and 5, much higher than the WBA, but WBA it's a diamond. I think I stay telling you that very WBA very cheap, and its money is dividend co. The current dividend yield for J&J is about 3%, the payout less than 1, and also we can see that the 3-year dividend growth rate is the same as WBA, is more than 5%. And let's check out the last company for today. It's Target. It's a very huge retail company. For years it has proven more profitable than its peers, with some the highest gross margin and operating margins in retailing. At the same time, it focused on increasing its e-commerce business, and expanding in store offering has kept sales and the profits growing at a nice clip. With the dividend growth at 50 years and continuing, dividend investors should put Target on their shopping list, of course. If we will check the chart, we can see that there is here major support level is about 100, and but I'm not sure it's going to fail so strong down. It's about 30%, but here now Target is about down from the beginning of the year is about 30%. We can see that here accumulated nice volumes at a level of 27. So most probably I think that Target has ability to raise in the future quarters more than 30% up. Also now it offers a dividend about 3%. Its current PE ratio is 18, and let's check out the PS ratio, price per share. Let me make the amounts. Yeah, we can see that it's less than 1, so not expensive. It's much better than 1 and 2, so why not to buy very cheap stock, very stable stock, then now even offering now a very nice dividend, about 3%. So it was my analysis of 3 dividend stocks for today. I also have a lot of technical analysis of S&P 500, other US stock analysis. And if you like this video, don't forget to subscribe to my channel. See you on the next time. Bye.